Good afternoon, everyone, and welcome to TBR's Business Intelligence and Analytics Benchmark Review webcast, diving into the recent results of TBR's BI and Analytics Benchmark Report. For the remainder of the presentation, we will be referring to Business Intelligence and Analytics as BI and Analytics. My name is Allison Crawford, and I'm hosting today's webinar. This benchmark webinar will apply TBR's business lens to the BI and Analytics market, providing our clients with an in-depth view into the state of the market. We're looking forward to answering your questions and helping you grow your business through the information we provide in the benchmark. Before I pass this over to Elizabeth and Allan, there are a few housekeeping items I'd like to cover. First, we'll be recording today's session and posting it on our YouTube site, TBRI channel. We encourage you to visit our channel to watch this presentation or any of the others that we've posted. Second, we'd like to hear your opinions and thoughts on the materials we're presenting. Please send any questions and comments to the Q&A or chat function. Allan and Elizabeth will address them at the end of the presentation. Or if you'd like to set up a private inquiry for more detailed discussion, please reach out directly to the analyst at the end of the webinar to set up that conversation. Third, we'll send out the slides to everyone registered for today's webcast within 24 hours of the conclusion of the webinar. You can also find the slides as well as other thought leadership pieces, webinar decks, and commentaries on SlideShare at www.slideshare.net/TBR_market_insight, and I'll provide all the social media links I mentioned at the end of the presentation. With that, let me introduce Elizabeth Hedstrom Henlin and Allan Krans. Elizabeth is the lead analyst covering vendors such as Oracle, SAP, and SAS. From a market perspective, she covers enterprise software and segments including BI and Analytics. Allan has been covering and writing about the software market for over 7 years and is leading our research and coverage in private hybrid cloud. Together, their strategic advice is helping several of the BI and Analytics vendors identify new opportunities and revenue streams. With that, let me hand this over to Allan.
Great, Allison. Thanks, everybody, for joining. We're excited to be here with you to share some of the insights from our most recent benchmark and market landscape focusing around BI. I wanted to take a minute just to step back and look at what's going on in the space. Why are we covering it to this depth? And so we've been looking at BI and Analytics as a growing segment over the last 3 years. And in a market landscape that we've been looking at in IT overall, it's notable that for both on the customer side, one of the things that we've seen excites them the most, that they have the most future expectation for investment around, and the return from those investments, it focuses on the new sources of data and information that they want and need to drive better business decisions and results. Matching that on the vendor side with a segment where we've seen both the number of participants as well as the depth and the strategy significantly expand, both for vendors that have been mainstays in the IT space as well as those up-and-coming vendors that are either startups or smaller portions of much larger companies. This is a growth space on the vendor side that is unlike many that we look at, and one that we see increased investment in there as a result. So in order to really dig deeper into this segment to deliver actionable insight for our clients, we've added this benchmark and market landscape to both segment the market as well as dig into the business models and the investments that are being made. So instead of just covering the market from an overall opportunity standpoint, we're looking at the delivery model with things like cost of goods sold, looking at the distribution, go-to-market, partner strategies with the SG&A expense lines, and then what the investment is from the product portfolio and the functionality perspective that shows up as we look at the R&D expense line. In the end, we get to the bottom line, we're looking at ultimately what are those segments of the market and vendors that are driving sustainable businesses around BI and driving profitability as a result. So we're really looking at a quantitative view that tells the story for the maturation and the expansion for BI, and then pairing that with the customer landscape views that we have on an ongoing basis. So you can see our overall taxonomy here, as well as the financial measures that we're using to segment the market and analyze ultimately what's the business model and story being told by the vendors in the space. So within the overall report, we did an initial instance of this earlier this year. As you can see from the vendor list at the bottom, significantly expanded the coverage. And so the report really rolls up two perspectives. First is the deep company analysis for the vendors that you can see listed at the bottom, understanding their unique perspective, strategy, and approach within the BI space, and then digging not only quantitatively but qualitatively for the strategies that are being used to get there. And then combining that with a market perspective that looks at draws from our conversations with the market, our customer-facing research, rolls it up into the overall market size, but also what the trends are that vendors are actually addressing. So we're matching the leading vendor analysis with what's actually happening in the market, rolling it up into an overall market perspective that we're updating twice a year. So with that, that covers kind of the impetus for this product, the main components of it. I'll hand it over to Elizabeth, and we're going to dive into some of the insights that came out of the most recent report.
Thanks, Allan. So when we look at our key takeaways from our BI software vendor benchmark, and I should note that this benchmark will publish tomorrow, we're looking at a market that is starting to show some slowing growth. When we're looking at projections out to 2015, we're looking at a projection of about 4% annual growth and a market that is going to top $37 billion. And it's an interesting time to be in this market. This is a case of, as we're looking at it, a real inflection point where finally the non-believers are on board. So it's a market that is maturing but still has a lot of opportunity for those vendors that know how to slice and present their BI portfolios to the right segments of customers in the right ways. You've got a lot of maturing customers that know what they need and where they need it and looking at very targeted styles of purchasing. But also we're looking at those what we termed in original purchasing research as non-believers finally on board and ready to get started, but they do know that they need some help to get there. So when we look at how vendors are behaving, it's about how do you take point products to either entice new customers that really don't know where to start, or tag advanced tools into existing installations to deepen the quality and the extent of the analysis possible. And it's how vendors are going to really take applications and platforms, those end-to-end solutions under a single SKU, as the path to both defend install base customers and also entice broader share of wallet gains from existing customers over time. So let's get started with our market outlook. When Allan talked about our taxonomy a few moments ago, this is where we start to get into definitions. So for our applications and platforms, these are integrated solutions with with 3 or more points of BI functionality under a single SKU. For basic and advanced tools, these are point products that address single-purpose needs, and as we get into those discussions, we'll walk you through some of the segments behind that. Just as an example, we look at reporting and dashboarding as parts of basic tools, and data visualization and predictive analytics as advanced tools. And then data warehousing is looking at those portions of data warehousing deployments that are specifically driven around business intelligence. Finally, BI and analytics engineered systems. If I had to define this for all of you, this is our answering the question of, within the BI market, for those vendors that have engineered systems, what portion of their BI revenue is being delivered on top of a box? We won't get into that today, but we will. That is covered within the benchmark, and we're happy to set up private inquiries for people that want to ask us about them. So taking a look at our market projection, we really see a slowdown in this market being driven by a number of key areas. The first, that we are seeing a rising maturation in this market. The hype cycle has passed us by, and now we're really looking at a universe where everyone understands that, and everyone, I mean end users, understand that business intelligence is real, it's necessary, they know they need to get there, but they're really not sure how they're going to, how the laggards in particular are going to get started. With the ongoing macroeconomic uncertainties in Europe, as well as the impending and apparent shutdown of the U.S. federal government, we project that there's going to be a distinct clampdown on customer spending in the back half of this year as they wait this out. And that gives vendors, candidly, time to consolidate their portfolios. So we see those vendors set for 2014 growth as those that capitalize on the next 6 months as opportunities to either acquire or develop their way into broader applications and platforms offerings, as well as distinct points of functionality that are missing. And I'll highlight SAP's third quarter of this year acquisition of Kexin as a great example of that. We'll talk about that one in the next webinar.
And another thing to note as we look at the overall market forecast and some of the growth figures that we're looking at, this is pretty well validated. We did a line of offerings around spending in certain verticals called Source IT. We looked at healthcare, banking, public sector, and almost universally the types of increases that we saw at a macro level in terms of the budgets that were being planned and executed both in this year and next year, we're in that low single digits, and it was more an effort on the part of participants to shift dollars around to change the allocation of that overall budget rather than a significant increase in the overall level of IT spending. So when we look at something like BI analytics, the 4% growth doesn't seem tremendous, or certainly not the rate of increase that we've seen over the past couple of years. But in an environment where a lot of growth is being eked out through reallocations and looking to reduce overhead, and really looking quite carefully at IT investments as we go into the back half of the year, it is an area that for a lot of vendors and even for customers is an overall increasing area and something that is rising in importance, even if the percentage of dollars year over year isn't tremendous or in the double-digit category.
And it's also worth noting that across that research that Allan just mentioned, BI consistently came up as a point of planned investment in both planned projects as well as discretionary projects.
Yeah, when we looked at in a very bi-vertical, but all in all, the consistent message of better managing data, getting better insight from data, whether on the healthcare, it's about clinical decision support. The exact use cases vary by vertical, but the message was consistent in that the management and leveraging of data for insight and decisions was consistent.
So from our overall market landscape, we'll take a deeper look at the performance by vendor. And here what we'd like to do is take you through where we see some opportunities not only for vendors that we cover, but across this broader landscape. To orient you to the graph on the vertical axis, we are looking at year-to-year overall BI revenue growth by percentage for each vendor. On the horizontal axis, we're looking at absolute dollar growth by vendor, and the size of the sphere represents the relative volume of the vendor's business within this segment. And I think one of the interesting points for us as we looked at this data is that for the first time we're starting to see some of the pure plays breaking apart from one another. 6 months ago, this was a universal cluster of vendors trapped at the 0 point in the axis. And now you're really looking at vendors starting to break away. And I think there is a certain degree to which the successful IPOs of vendors, including Tableau, create an environment where a rising tide lifts all boats in similar segments. But you're also looking at the opportunity created by business value positioning of either applications or very specifically targeted tools in creating value for customers from data that's already in-house. We're seeing across the software landscape, but particularly within business intelligence, that when IT is looking to satisfy the line of business purchaser, the idea of getting more from what you already have with only an incremental point of spend continues to remain very appealing. So calling out a couple of vendors that really managed to pull away this quarter. When you look at Tableau, again, Tableau brought the recent edition of its 8.0 platform to market and also added cloud delivery capabilities. So really looking at how you can best consolidate those points of data visualization and analysis into one end-to-end point of purchase. Splunk is really looking at machine-to-machine data, and we believe that Splunk is going to be positioned to sustain this level of growth for at least another quarter or two, as they are capitalizing on not only their own marketing, but recent acquisitions to take this idea of big data into something that is more structured. So moving from new points of analysis to making it a very quantifiable, understood concept. And then when we look at the enterprise software vendors, obviously they are the forces to be reckoned with in this segment as they bring robust portfolios to bear and a broader install base that can be cross-sold to and upsold to with relatively minimal effort. But it's worth noting that even the broader cross-selling opportunities really dictate that the business value of business intelligence be brought into focus, and that's where vendors like Oracle in particular still have some ground to cover as they evolve their own messaging and positioning or risk some heterogeneous deployments within their customer environments, because it doesn't take much of Oracle's market share or SAP's market share to make Tableau or ClickTech very, very happy, and that's where tool-specific deployments can really make some headway for vendors. So taking a look down at the deeper segments, when we look at basic and advanced tools, these are the contributing segments that we take a look at. And it's worth noting that when we looked at our original purchasing research back at the end of last year, customers really came back to us in interviews as noting a real need to evolve their own understanding of business intelligence, that when they looked at business expansion, they really started to build a foundation from reporting to dashboarding and data discovery. And once that foundation was in place, they were then able to take the next step and think about how do you move from understanding what you have to making recommendations about what's to come and improving the way in which you collected your data in the first place. So that's where our segmentation started from, with that original research. So basic tools we see really as the opportunity for vendors to go after those non-believers. They finally understand what they need to do. They really don't necessarily know how to get there. And then looking at advanced BI tools, this is where those companies that can position advanced tools can really help early purchasers expand the final stages of their own BI adoption. They already have the toolkit, they have most of what they need, and they're the ones that know that they need another hammer or another wrench. They know that they need predictive analytics because they're missing that last piece of the puzzle. And that's where we see opportunities in this segment for broader growth. So looking at our projections around vendors within the basic tools segment, and again, to orient you to the graph, we're looking at segment year-to-year revenue growth by percentage on the vertical axis and segment absolute dollar growth on the horizontal axis. It's worth noting that the enterprise software vendors really are the forces to be reckoned with here. They have established credibility, especially when you look at someone like IBM with the Cognos suite and SPSS. But I think it's worth noting that, in my opinion, the heavy arsenal isn't as necessary as it once was, in that you're looking now at most customers already being well established in the basic tools segment. This is a real opportunity to get the late adopters and the non-believers, and if the enterprise software vendors evolve their own positioning to be able to tell a broader story but still move a particular point product to the fore to show that you don't need to buy everything at once, they're going to avoid overwhelming those late adopters who really need that trusted advisor approach. So to call out a couple of the pure play leaders that are starting to disrupt this segment, we're watching ClickTech very closely. Its IPO also was relatively successful, and they're one of those pure play vendors that really got out into the channel early. They not only developed their own reselling partner program in what they call it, I can't even pronounce it, so I'll spell it, the QO-NECT partner program, as well as Click Market, it's their own app store. So they're really looking at how do you get not only the resellers, but the independent software vendors on board and on board early to sustain their broader, not only market presence worldwide, but brand development. Pentaho capitalizes on their online analytical processing presence as well as their credibility within the open source community to attract not only developers but also those broader open source evangelists to carry brand awareness for them, and have managed to start to pull away from the broader pack. And we really think that the opportunity in this segment, as we noted a moment ago, for not only growth in the back half of this year but into next year, is how to present the basic tools portfolio as a vehicle to attract late adopters and really help those immature users finally come fully around and get their BI in-house. When we looked at purchasing behaviors in our original adoption study, we called them the non-believers. We noted industries in particular that were in that non-believer segment included the public sector, and it's worth noting that we're seeing the federal government now start to input big data initiatives. We expect a number of the European Union governments to follow suit, and those vendors that have managed to establish broader worldwide presence will be able to capitalize on those countries as they come around as well. So advanced tools remains a very fascinating segment for me, and I think it, as well as the BI applications and platforms segment, are where we're going to see the more high velocity growth relative to the other segments. Segment revenue growth percentage on the vertical axis, segment absolute dollar growth on the horizontal axis, and again, it's worth noting that the size of the spheres within the graph represent the relative magnitude of vendors' revenue within the segment. When you look at companies like SAP and Oracle, they really are best positioned in this grouping, as well as I would also include SaaS in that grouping, as those vendors that can layer the right tools atop customers' existing installations to ensure long-term loyalty and purchasing, and to prevent defection to vendors including Tableau and ClickTech. It's really about dealing the deck of cards for your customers and making sure you've got the right hand to help them be most successful. But when you look at vendors like Tableau and ClickTech, again, those vendors, ClickTech in particular, really has been focused on marketing its interoperability as a platform, as a suite of tools within broader customer environments, noting partnerships with other vendors, and focusing what marketing spend they do have on highlighting their ability to play across the board. And we see that as a point of positioning that's going to appeal to a lot of customers. Heterogeneity seems to be on the rise across software market segments, and I'll highlight the continuing hypervisor wars as a great example of that, with Hyper-V continuing to actually make some ground against VMware. But we're also looking at vendors like Tableau that focus on targeted market expansion early. When in 4Q12 and 1Q13, they were really looking at Latin America as an early point to establish themselves, not only with some incremental direct infrastructure, but through local reselling partners and ISVs. And it's those vendors that are able to really put incremental investments in markets where they want to be, are able to use what we call a string of pearls approach and look at tier one customers, and by tier one, I don't mean just the Fortune 500, but really those customers within local markets that show potential buyers. This company understands my market, understands how I as a company operate, and helps then maximize the effectiveness of marketing and sales dollars going forward.
One of the interesting things about the advanced BI tool segment, and this it come up both from a customer and a vendor perspective, is when we looked at the customer set, that for those that self-identified as being less mature in terms of their adoption of BI, felt like there was additional opportunity that they weren't yet taking advantage of in terms of using more tools, doing more with the data that they had. They didn't necessarily want to go through the traditional tool sets and evolve, through all the steps that a lot of their more advanced peers have gone through. They wanted to accelerate right to lighter weight solutions that they can get started with more quickly, but still deliver them whether it's predictive analytics or those types of insights that tie very closely to the business decisions that were at hand. They wanted to accelerate that transition in the journey to get there. And then on the vendor side, just over the past year, we've seen a tremendous focus from folks like Microsoft, IBM on lighter weight solutions that are easier to use from a business user perspective, less technically complex, less layers of solutions required to get there, that made it easier to get started and start delivering business results from the data, so that it aligned with what we saw much earlier on the customer side. So if you think about the opportunity from a segmentation perspective, a lot more focus and emphasis on the customer side and also more tools on the vendor side in the advanced BI category, rather than building the legacy BI infrastructure and the basic tool set. We see a much quicker acceleration of customers into this market segment that is shifting the dollars and the focus into this area rather than progressing up through the core traditional tool sets.
And I think one more thing we'd add is that when we look back at what we define as our non-believers, they're really facing shallow implementations of business intelligence by department after department rather than looking at enterprise-wide deployments. And this is another area, especially within this segment, where there's the opportunity for vendors to rapidly expand footprint within customer environments. So the innovation. And this is where I think there's going to be a lot of exciting opportunity, especially for those vendors like SAS that have been in this market for some time. When we look at BI applications and platforms, we look at three different subsegments. The first being performance management. How do you look end-to-end at a customer's environment and offer recommendations on how best to improve? Then looking at analytic applications and platforms. These are these end-to-end solutions that really that offer customers the opportunity to not only expand current deployments, but also create for the vendors a single point of purchase to move ahead for late adopters. And finally, the analytic components of business applications. And this is where we actually see a lot of the enterprise software vendors spending a lot of their time, is how best do you embed analytics into JD Edwards, into SAP ERP, and create not only immediate results for customers, but tiebacks to broader BI portfolio purchasing. It's all about share of wallet and install-based defense. And this is where we see a lot of growth potential. I'll note that by growth potential, I mean consistent positive growth. We do not expect this segment to outperform our broader projections for this market, but we do expect it to be the leading segment across the next 2 years. As we noted a couple of slides ago, BI remains a top priority for customers in purchasing when we looked at our Source IT reports. Across industries, though the percentage of allocation was very specific. And this segment really remains, I think, one of the biggest opportunities to capitalize on that near-term spend as customers look at where they need the most help in realizing value and driving improvements in their business in the near term. So when we look at the, again, divergent group of pure play vendors, you'll note the circle highlights some of the positive upward trending vendors, and I'll note Good Data and Pentaho in particular as those that are positioning industry-focused opportunities. And then we look at the laggards near the bottom of the axis, and I think TIBCO of all of them is one of those vendors that is positioned to change its location in the near term. This is a vendor that has a proven product in Spotfire, but has run that business as a relatively independent entity internally, and I think that as TIBCO evaluates how best to bring an integrated sell across its broader business, that's where you're going to see Spotfire showing some upward trajectory in the coming quarters. But vendors including information builders and, when you look at portfolio assets, looking at Informatica and some of the more information-focused opportunities, this is a segment that shows some opportunity for acquisition. And again, I'll note the purchase of Kexen as one of those points where larger vendors are looking at these pure plays as the potential to accelerate their own internal development. And I would say that Good Data remains a vendor that is ripe for acquisition as one that has embedded a very compelling sales and marketing analytic application and iterated it across a number of environments. This is a technology that we see very much in the vein of a lot of what Salesforce.com is doing. And it's a chance for some of the larger vendors to perhaps increase some competitive traction against Salesforce.com when you can embed a product like Good Data inside what you already bring to bear. So I think Good Data, I'll mention them again, as a vendor that managed to get out into APAC relatively early in its own, I think, in its corporate life cycle. They set up an Asian subsidiary early this year and set it up as an independent company. So it's a vendor that understands that when you look at regional expansion, particularly a region with as many high growth markets as APAC has, you need to make sure that you're setting them up to run freely and be as agile as they need to be without worrying about an undue amount of corporate oversight. So I think we'll take a look at our projections, and I look forward to seeing all of you back on this call in the next about 6 months from now, so we can walk you through our pulse check on our projections and show you where we're at. But the story for the balance of this year really is about interoperability and integration, whether you're looking at some of the larger vendors like SAS and IBM as those vendors that can show integration across its portfolio, not only within BI, but across its broader portfolio as a product or a solution that can integrate into broader offerings, but also looking at interoperability as the independent way to really move into competitive environments. So for the near term, vendors investing in their own portfolio as a means to defend their install base. How do you stay in tune with the advanced purchasers' needs? And then looking at presence within BI segments over the longer term, tools, applications, and platforms as the vehicle to create easy points of approach for lagging adopters and for those vendors that are evaluating what their next move should be. How do you encourage customers to consolidate onto your platform and not your competitor's platform? So with that, Allison, I think we are ready for questions.
Great. Thanks, guys. And I'd like to encourage anyone who has questions on the materials that Allan and Elizabeth just went over to send us through questions over on the right-hand side of your screen, either through the Q&A or the chat function. We've had a couple questions come through. So the first question we had, guys, you mentioned that Q4 will be flat. Do you see any divergence between the growth in emerging markets compared to developed markets, and what would be the cause of that divergence?
We do think that Q3 and Q4 are going to be relatively flat in the balance of this year, and I think, yes, you are going to see some accelerating growth in emerging markets, but candidly, it's off of a much smaller base, and so it's going to be counterbalanced by much slower growth in the broader maturing markets. I think the U.S. remains a leading adopter in this space, and as such is going to be the relative drag on broader growth numbers. Allan, anything you'd add?
I mean, I'd agree. I mean, I think overall, we looked at some spending patterns in the U.S. versus outside the U.S., and the trajectory seems to be about the same. However, as Elizabeth mentions, the base and maturity of the the install base differs significantly, and we've seen it in multiple technologies, but it's particularly prominent in BI, and kind of goes to that overall trend of how can customers in developing regions that don't have the same type of legacy data infrastructure to come in and manage and draw from, get solutions that are lighter weight, that are lower overall deal size for the vendor, but that speed their transition along that path to ultimately what they're trying to achieve, which is data insight and better business decisions. There are less layers of solutions for vendors to come in and provide as part of that in some of those emerging areas, which is one of the overall things that we're tracking, and an impact from the vendor side on the addressable market opportunity. It's a different set of solutions, but overall, fairly consistent spending environment from what we've seen.
The next question we had come through. How are you seeing IBM's initiatives around embedding analytic capabilities in all sorts of its software products, e.g. security, social media, vertical software, etc.? Is it a trend that you are also observing in other vendors, or is IBM taking a step ahead?
So when you think about our taxonomy, we've actually broken out a separate area to track some of the developments here. There's analytic components of applications, and so we're looking at that discretely because we do see this as an overall trend. It's not only IBM, it's for the Oracles of the world, for the SAPs of the world, for the Microsofts of the world. How do you leverage the applications install base that you have to provide complementary analytic solutions? So if you think about it from a customer standpoint, there's the ability to very tightly tie the insight required to make business decisions with the applications that actually facilitate that and deliver that data. So that is a trend it's really delivering in a packaging strategy that we're covering, and we see that as one of the growing areas of the overall market, not so much selling the standalone solutions, but finding complementary use cases for analytics that pull from existing strengths and existing customer bases rather than trying to go out and necessarily win new customers based on the merits of the BI solution on its own.
Okay, looks like we have one more question, so if anyone has any questions, now is the time to send it through. The question we have, you guys, is do you see increased M&A activity in this market as it matures?
Absolutely. We noted that a couple of 3Q opportunities already. Splunk has been on a buying vendor. I think it's really going to come down to technology-led acquisitions. This is not a market where you're going to see vendors acquiring for growth. You're going to see them acquiring for portfolio as a means to both stay ahead of near competitors. I think we're going to start seeing some mini battles of the titans, like you look at it in the enterprise software space, Oracle versus SAP versus IBM. You're going to start seeing a lot of these targeted application vendors really looking at their nearest competitor and pushing portfolio-led changes via acquisition or even via development as the means to put that differentiation out there once and for all, and in so doing, eliminate the competition that way.
Okay, I think you guys, nothing more to add on that topic. So with that, it doesn't look like we have any additional questions, but I'm going to leave the line open for another couple minutes in case anyone has any additional last-minute questions. So I want to thank Allan and Elizabeth for their time today, and thanks for those of you that did send through questions. As I mentioned here, all the social media links, you can follow Allan, Elizabeth, and TBR on Twitter. You can also join us on YouTube and SlideShare to look at this presentation and the recording of the webinar as well. If you have any additional questions you'd like to send through, now's the time to do it. Otherwise, we will look forward to speaking with you guys all again in the next 6 months, and have an awesome afternoon. Thanks, everyone.